Good morning, everybody. My name is Pete Renzulli for T3 Live. I'm Class B member, T3 Trading Group, and welcome to the morning call on Monday morning, November 5th. Well, we got some heavy selling on Friday, and I think it took quite a few people by surprise based on the buying that we had the previous day on Thursday. The one thing that we did mention Friday morning was that the buying was on relatively light volume. We essentially did get over 100 million shares on Thursday, but picked up significantly on Friday. As you can see here, 137 million shares on Friday. Actually looking for the market to open lower to neutral this morning, just based on some news over the weekend. We got a lot of people here in New York still scrambling around for power. Quite a few people still out of their homes. So if you happen to be out of the New York area, please try and be a little patient with us here in the city. Really scrambling. Some people are scrambling to find some place to live, never mind some place to find to trade. So that being said, we're going to run down the list. The market in general, spiders, really, as far as I'm concerned right now, the level to be watching is the 140 level on the downside. It seems to be the support level. I know it's just below this trading range that we were in for 6 days. We're basically back into that range right now, maybe trading towards the high of the range, but give or take 140 is the real support level. If we break 140, 136.74 would be the next support level. Not hoping we get down there, but that does seem to be the level that we're going to be leaning on. Normally, when you get a day where there's massive volatility like we had on Friday, you get some sort of a contraction day, which means that if we end up chopping around this morning, very, very important to make sure you pick intraday levels to be trading off of. So in other words, if intraday, the first 15 minutes to a half an hour, we have whatever that range happens to be, the better trades will be outside of that range. Now, that being said, I'm still as I was on Friday. In a lot of it was interesting. Friday the market was a buy, but a lot of individual stocks were a sell short, and those individual stocks took over. So what we're going to do is we're going to end up going over to looking at the stock that everyone seems to be watching these days, is Apple. And I think if you asked everybody a month ago, would you like to be able to buy the Apple at the 200 period moving average, I think a lot of people would have said it's never going to get there. Well, guess what? We're there. So it's interesting. It's not technically a long from the charts. However, the sell short based on how far it's traveled over the last week or so makes the short sale not as good of an idea. In other words, the reward potential for it to continue to follow through has diminished, and especially since it's at a significant support level. So if you are a buyer or a long trader only in Apple, you're actually probably going to get a tactical area to be looking to bid this stock this morning into this 576.80 area. Now, I said tactical, very, very important. That simply means that it is not an A long, but you are at a significant support level. So we have Friday's lows and the 200 EMA basically in the same area. That's where you'd be looking for some sort of support if you're looking for Apple to give you a signal to be looking to get long. Now, getting into some of the other bigger stocks that we normally watch, LinkedIn actually had double its normal average trading range on Friday. Looking for a little bit of consolidation around this 105 level. If, again, we hold the 105 level and find some intraday patterns, whether it's an ascending wedge, bottoming tail, or a pivot low, I think you can be bidding into the 105 area, maybe the lows from Friday. If not, if we break that 105 level, looks like 100 to 107.75 would be the first area of support. So, again, as much as most of our community enjoys trading from the long side, we said this Friday, you cannot ignore the charts. So a lot of these stocks are pointing down. It's very, very important to pay attention to the charts. So if you are a long-only trader, be disciplined and do not try and pick a bottom unless you have a significant support level or an intraday continuation pattern, which means a push to the upside and a flag on the intraday charts. But you must recognize that it's still nothing more than tactical long if your longer time frame charts are pointing down. Now, this stock, it's only pointing down for October. It was a fantastic long coming into the month, but now it's relatively a short sale based on the 8's below the 21, 21's below the 50, but now the 100 is the $100 level here, if you look to August, was a support level, which is now ultimately going to end up being the 200 EMA here. Again, if you're finding something to do on the long side and it's not obvious, that means it's not there. So be disciplined, okay? Be disciplined. Next, we have Amazon. We had a couple of days in a row in Amazon two inside days in a row, and we were looking for a breakout to the upside, and we actually got it on Friday. It was a pretty good, clean push. We had quite a few people getting involved up in this area based on the talk in the chat, but the market weakness just overtook the stock. Now we're right back into the middle of this 3-day range. So as far as Amazon is concerned, I think that we're kind of stuck in this window here. I really need to see it trade out of this range here. We're forming kind of a weak pennant here. This little spike to the upside doesn't make it as clean, but you can definitely see how we're making higher lows here and lower highs. Look for a trend again, as we had called out in Amazon on Friday. You want to wait for it to pick a direction. All this consolidation usually leads to a good trend type day. Google, looking for Google to look. The bottom line is the stock is basically in a trading range. We're looking at and this little flag here. Flag, pause, consolidation, whatever you want to call it. Okay. Very hard to want to be a buyer of this stock right now. And here's the downside trade though. If you are a short seller looking to trade this, you have all of this support level in the window here. I don't see a huge edge to being long or short this stock right now. So what I'm going to be looking to do right now is I'm going to look for the next momentum move on the daily chart in this stock, and if it breaks these lows, you got a little bit more aggressive move down to 660, 640, 646. But as long as we chop around in this area, I think you can find some better ideas. Facebook is an interesting one here as well. We had the earnings, we pulled back, couldn't get through this 2336 level. Pulled back now. We're kind of holding between the 21 and the 50. But here's the interesting thing that I'm looking at in Facebook today to be a buyer. The market got absolutely clobbered on Friday, and Facebook kind of held in there. If we can trade above Friday's highs and get them to this 2170 level, 2188 level, I actually do like this stock long just based on the relative strength of the stock. Even though it closed below the open, it did not come in the way the rest of the market did, so it kind of showed some sneaky strength there. IBM was probably our sell short of the day, looking at the price point sheet from on Friday. Pretty nice bear flag. What can you say? It tested the previous day's high just below 198 and basically trended down the entire day. Probably one of the key trades that we had all day. You really didn't need to do much more than that. Perfect test of that resistance level. Now, the average true range in the stock is right around $3, so you're probably going to have an opportunity to look to sell short the stock again into support. But be aware of the support here. Make sure that you're scaling out into support and not looking to add to this, because this is a pretty big move if it does trade down. That'll basically be $7 in 2 days. Baidu is another interesting one. Finally cracked the 106 level that we were watching. I actually did take a couple of sell shorts into this level. First one didn't work out. Second one worked out okay. Next level here is 105. As long as you are lower lows, pivot highs, or wedging to the downside in the stock on your 15-minute chart and trading below on the hourly chart, I think you're okay to continue to sell this into that 100 support level. I will say this, though. Be careful, because you can see here clearly we are trading in basically a very clean $10 range, and since the level is so obvious to everybody, if we trade back above 106, don't fight it. Kick it out, let it do whatever it's going to do, and then look to reestablish your position on the short side below that level. If you only trade long and it does get back above 106, you clearly have the 116 area to be looking as a resistance level to trade into for a possible target. But again, not a big edge in this range here unless you're trading the range. If you are looking to sell the stock short, it looks like a pretty good sell short below the 106 level as long as it stays there. What else we got here? Wynn failed at the breakout level. However, I still do like this as a trade on the long side. We pushed through this level, gapped up, pushed through, had a nice, really clean breakout again on decent volume, but then we pulled back on Friday with everything else. I like the stock, looking for it to open a little bit lower and right around the 80 MA, which you can see it's been holding since the gap up there. LVS, not so much though. If I had a choice between Wynn and LVS, this is the one I'd be looking for. You can clearly see here that LVS is having a really hard time with 47. I don't like LVS at all, just based on that fact. Now, that doesn't mean I'd sell it short, but I don't like the long up in this area. So wrapping up with some of the other key ETFs that we're looking at. SLV clearly broke down, really clean flag here. Again, I'm not a buyer here unless we move out a little bit longer time frame here. I like it a little bit lower into this where it just wedged and broke out. But again, I don't like it at all, quite honestly. Be okay with sitting on the sidelines. USO, same thing, broke down pretty cleanly. Gap down, bear flag, holding below all the key moving averages. I don't like this one either. Guys, it's very okay to be on the sidelines. All right, very, very okay. Last but not least, we're going to look at Goldman Sachs. And again, very similar to what we're seeing in LVS, where it's having a hard time with the number. If you can get through this level, this 126.48 level, 140 is the next level. But we can't ignore the fact that this 1, 2, 3 times now we've gotten up to this level and we can't hold above it. So you have to weigh your reward potential to the risk. If you open lower and open to the 121 area, I actually like the lower opening. Look for 125 as a target. But if we get up to this 125 again, I don't like the stock until we have a solid close or a flag above this 125, 126 level. So that's the morning call, everybody. If you are a long bias trader, make sure you have really solid levels or key intraday continuation patterns to the long side. Otherwise, step aside. If you're a short seller, you're probably going to have some follow through on Friday's price action. Have a great day, everybody, and I will see you in the main VTF.